morning. This is Elliott for the Moneyman Report. We're joining you on 880 AM The Biz here in Southern Florida, a very rainy Southern Florida, and also on the online to the whole world at iHeartRadio.
And I'm Dan Frischberg. You're listening to Elliott Goo, and this is the official radio show of capitalism. And, of course, aptly named the Capitalist Times segment. So, and good morning, Alicia. Hold on. We've got you on.
Good morning. You got the Senate, the one you wanted.
I got the Senate I wanted. And now, just from the shortest term point of view, it wouldn't shock me if we had a little buy the rumor, sell the news, because it looks to me like the stock market has known this was happening for a while. It's funny because the stock market doesn't really predict very well. It usually just extrapolates whatever is going on. But, you know, at key moments, if you go back in history, at the moment that World War II actually turned, when the Allies were gaining control, even though nobody really knew about it, and the Europeans were already getting ready to live under Germany for 100 years, but just right at that moment, the stock market started to go up, and it turns out that that was the exact, within hours of the time that the actual war turned. And on these major events, this sometimes happens, and this looks like an example of it. Now, we may continue to rally a little bit because the stock market's been exceptionally strong, and conditions everywhere are just getting better and better. In the long run, there's no question that what's going on is relatively good for everything, even your specialty, the falling oil prices, Elliott. Those are actually good for most of the country. There's about 15% of the gross domestic product that may have a little bit of a decline. None yet, actually, probably. Right. But there may be some decline in the 8 states that specialize in oil, in that they may not have the kind of job growth they've had before. They've all got cranes that look like Beijing and Shanghai everywhere because they're growing so rapidly. That's happening in Houston and Dallas, and they're, well, I don't know that they're building with cranes in North Dakota, but they are building whatever they know how to build, whatever they're able to build. They're putting in. They're growing very rapidly, and that could moderate a little bit. But for the rest of the country, we have a whole bunch of people that just got an immediate raise.
Absolutely, and I do think you'll see actually some stickiness in the energy sector as well in terms of employment. And one of the problems that a lot of energy companies had back during the last big decline in energy prices, and I'm talking about the late 1990s, is that they fired or let go a lot of their experienced engineers and rig workers, and then when they had to hire them back, when we had the whole boom, it was extremely expensive. So I think you'll see them reluctant to really fire a lot of people or lay off a lot of people. You just might see a decline in that. But more broadly, you're absolutely right. It's a huge benefit for the consumer. It's equivalent to a major tax cut. The rule of thumb has been that a $10 decline in Brent crude oil prices globally that sticks for more than a month or two adds 0.5% to annualized GDP growth. And that's quite a lot if you think about it. And it's not only here in the U.S., but it's globally. It's all these countries that have been a concern, like China, where there's a big concern that there's a slowdown in growth in China. One of the best things that can happen to China is a cut in their energy prices and a cut in their energy import bills. And so that should help to firm up growth in the Chinese economy and sort of take that away as a potential headwind for the market going forward.
Okay, well, throwing it to the audience, 305-541-2350. You said someone is getting a raise. So are you guys getting a raise? Call in your question.
All right, and because the question is, what are you going to do about it? And I think that the investment world is going to heat up in such a way that it's going to be exactly the opposite of what I have been suggesting to people. And as this stock market does heat up over the next 3-4 months, I think what you ought to be doing, what smart investors are doing, is moderating a little bit in their equity participation. And I think what probably the smartest thing people could be doing is sitting down and figuring out how much money does it really take for you to live the life you want, because the stock market goes up and down. And the who makes money? Not just stock market investors. In fact, 95% of stock market investors lose money. The reason they lose money is not because of the stock market. The stock market goes up. It's been going up for 200 years, basically, with very little interruption. It's because people get over-leveraged. They get to the point where they can't behave right. They are operating on adrenaline, and investing on adrenaline is very much like playing golf on adrenaline. You just aren't made to do that. This requires good decision making, and in order to do that, you have to be comfortable. When you're over leveraged, you always end up making stupid mistakes. In fact, everybody's heard the name bucket shop, but a lot of people don't understand where that word originated. Bucket shop now means an unscrupulous kind of a broker who, but bucket shop used to be the place in the speakeasy days when we didn't have alcohol, where people could go, and the gangsters who ran that bar, where you had to knock and say, Joe sent me, and you would come in and they had a stock ticker. And the people would come in, and if the guy had $500, they'd give him $5,000 worth of chips to over-leverage him on purpose. And he'd be playing, and he'd be betting on stocks there, just like a casino. And because of the fact that they were playing with 5,000 when they only had 100, they would lose their 500 right away. Now, the bucket shop, of course, wouldn't let you play with their money. So the minute you were out of your money, they would just grab you and kick you out. But what happened was, because they got people to play over what they could actually afford and to be playing on adrenaline instead of brains, they won so often. The gangsters who ran the bucket shop were always ahead, as the house is, so that they didn't even really have to keep their connection to the stock market. They disconnected their tickers, and they just made up fictional tickers, but they didn't do it. It was just randomly making numbers. But they didn't even have to have the real prices, because everybody left broke.
Okay, when we get back, Elliott, would the Keystone Pipeline be the first order of business for the Senate? And what would that impact to our listening audience, investors-wise? And we'll be right back after these important messages.
Dan Frischberg here. You're already listening to my radio show, so why do I think my monthly newsletter matters to you? How can I imply that you need my letter even though there's a good chance you've been investing for many years? I got an email from a listener I want to share with you. He says he's been following my market X-ray for 10 years, but he still doesn't have the confidence to invest in a strong market. And he knows he should have more safe investments, but he doesn't know how to pick bonds or when to buy them. What we've been taught to believe is safe, like a U.S. Treasury, and especially a municipal bond, could turn out to be very risky with rates below the rate of inflation. That means you have to pay to keep money in a bond, a CD, or an annuity. All they can do is guarantee you'll be poorer at the end of the deal. But it isn't even that simple, because the people who bet against the U.S. stock market this year are actually losing money, and many of the stocks will hold their value and turn out to be safer than the bank account. You know, many of your friends are losing money with the world economy growing at 6% a year because they just don't know how the world has changed. I write these notes for myself at the beginning of every month to crystallize my thinking. I have to make strategic decisions, and on a different scale, you have to do the same thing. So I want to share my experience with you and help you position yourself to get a good read on what's really happening. Being paralyzed by confusion isn't a solution. Hoping the 90s come back is not a solution. Neither is blindly following the crowd, your emotions, or the conflicted ideas of some salesman. Get my best thinking in my market letter about all the markets every month, plain English, no jargon. That's at www.themoneyman.com. Try it risk-free, themoneyman.com. Or call 888-848-DAN-F. That's 888-848-3263.
Hi, this is Dick Robinson. If you're having a hard time finding the music you love, the Great American Songbook, will you join me for American Standards by the Sea? It's brought to you in part by Connecticut School of Broadcasting, the nation's oldest and largest group of broadcast media schools, with the campus right here in Miami. Listen on Sunday afternoons, 12 to 2, here on South Florida's 880, The Biz.
Dick Robinson's American Standards by the Sea.
This is Michael Medved for Townhall.com. With an increase in strength in both houses of Congress, Republicans must now use that new power to change the direction of the country. Blocking the Obama agenda is important, but it's not enough. Conservatives must fight for change, not just continued stalemate. Republicans should announce a brief set of clear goals and pledge to bring them to floor votes within 90 days. Here are 4 solid possibilities. 1, approval of the Keystone XL pipeline. 2, enhanced border security. 3, a reduction of the corporate tax rate together with closing of corporate tax loopholes. And 4, an immediate boost in defense spending to lessen the sequester's impact and to counter rising foreign threats. Putting such measures on the president's desk will force him to respond to the Republican agenda rather than allowing him to seize the initiative with more executive action of his own. I'm Michael Medved.
The daily inside analysis and clarity in the townhall.com commentary comes to you from the Salem Radio Network.
This is Chris Faulkner, CEO of Brightland Energy. Now, have you caught our new show here on the Wall Street Business Network called Powering America? We talk about everything from politics to fracking and filter it all through my number one motto, American oil from American soil. Now, yes, I firmly believe we can become totally free of foreign oil easily within the next 10 years, but we have obstacles, and that's what we're going to be talking about.
Powering America, weekday afternoons at 4 and Sunday afternoons at 2 on 880 The Biz.
Good morning, everybody, and welcome to Radio Wall Street. You're listening to the Money Man Report. We're broadcasting to the world on iHeartRadio, and we're broadcasting in cloudy, rainy, but beautiful South Florida on the beach at 880 a.m. The Biz. I'm here in the studio with the beautiful Alicia and Elliott Gu, the Capitalist Times correspondent. And Elliott, this really is a turning point for the things that really matter, because it started a while ago, and the market kind of knew that it was going to happen. I was hoping, but I wasn't sure. But what we've got is basically a move toward capitalism, and nobody could be happier about that than the official radio show of capitalism and the official newsletter and website of capitalism, Capitalist Times.
Right, absolutely. I think that if you look at economic growth in the U.S. over the last few years, it's been pretty bad. It's been pretty weak all along, and a lot of it's been based upon concerns about what the government's going to do. Whether it was the sequester or raising of taxes or regulatory issues. I think we were talking about before the break the failure to approve the Keystone pipeline, which is we've actually approved the lower part of the Keystone pipeline, which moves oil from Cushing, Oklahoma to the U.S. Gulf Coast. but a big chunk of the pipeline that would be designed to move oil from Canada down to the Cushing area and ultimately to the Gulf Coast, hasn't been approved by the president yet. It's really been a lot of foot dragging. The government has come out with several environmental studies showing that it would not create a huge environmental risk. The path of the pipeline was changed to avoid certain aquifers that were of concern to some environmental groups, but then they still haven't approved it, and it's just been delay. Partly, I think, because the president does not want to alienate sort of the more left-wing element of the Democratic Party that was diametrically opposed to the approval of this pipeline. So that kind of thing has been a huge issue for the U.S. economy over the last few years. To the extent that, and it's also on the state level. My colleague Roger Conrad at Capitalist Times covers the utility industry, and he just recently put an article up on their website talking about how important a lot of these governors' races around the U.S. were for the utility industry. For example, here in Florida, Charlie Crist, who appears to have lost the election for governor to the Republican Rick Scott, has actually been kind of an opponent to a lot of what the utility industry wants to do in terms of building new capacity to meet growing demand in Florida, and also allowing the utility companies here in Florida to pass through the cost of upgraded infrastructure to the consumer. And in a lot of states where you've had negative relations between the utilities and the regulator in the state, you've had big problems in terms of blackouts, brownouts, poor infrastructure across a lot of New England states, for example. So I do think that this election has been very important for a number of different sectors of the economy. Energy, of course. We might actually see some movement on the Keystone Pipeline now that the midterms are out of the way. And also on the state level, a lot of these governor's races are very important to the utility industry. But most important of all, of course, is that if the market can be less worried about what the government might do in terms of new regulation, in terms of new taxes, et cetera, it might actually allow business to flourish and the economy to grow at a little bit faster pace than it has been over the last 4 or 5 years.
We're about to go to a break, and I'm sorry?
John Najarian is coming.
John Najarian is next. Okay, we'll be right back right after this little break with John Najarian at CNBC and Option Monster. We'll see where is the big options activity going on. Where are the big hitters throwing their money this morning? That's what we want to know. Right after this break. Chasing stocks when the herd is chasing them is just gambling and hardly ever works. Hey, Dan Frischberg here from the Money Man Report. You've seen that firsthand. I'm confirming it. Everyone who tries to follow the crowd up and down ends up losing money. Meanwhile, Blackstone, Buffett, Zell, and the smart money everywhere let investments make them rich by investing in companies they understand and believe in and staying with them until the companies, not the stocks, fail. Because their investments mean something, they find courage, vision, patience, tenacity, everything it takes to succeed. Now those pros are also using one option strategy that's working like crazy, producing both quick profits and lower risk. My simple video shows it all in just a few minutes. I don't sell investments, no credit card, immediate gratification. Watch the video on themoneyman.com or call my hotline 888-848-3263. Themoneyman.com or 888-848-DAN-F.
Do you fear going to the dentist? Are you unhappy or ashamed of your smile? If you're like many others that fear and have anxiety of having dental treatment, don't allow this to continue. There is a solution. Hi, I'm Dr. Ramon Bana, and I'm trained in various forms of sedation which can allow you to feel comfortable and relaxed while getting the treatment you need. With over 23 years of experience, I have the ability to treat all your dental problems. Whether it be implants or smile makeovers, fillings, root canals, or extractions, I am committed to providing anxiety-free dentistry for you. Call now for an appointment and let me help you. 305-857-3731. The number again is 305-857-3731. So there it is. Stop hesitating and take the first step towards regaining your confidence and oral health. 305-857-3731.
Every 67 seconds, someone in the United States develops Alzheimer's. And today, more than 5 million Americans are living with the disease. Have you thought about who would provide that care for you or a family member and how to pay for it? The cost can run $80 to $90, $100,000 annually or more. But there's an even greater expense. In 2013, 15.5 million family and friends provided 17.5 billion hours of unpaid care to those with Alzheimer's and other dementias. Due to the physical and emotional burden, caregivers had $9.3 billion in additional health care costs of their own. All told, 60 to 70% of us will need some form of long-term care, and Medicare likely won't pay. Contact my good friend Lynn Rowe, CFP, today and receive her free booklet and information on long-term health care. Call 877-270-3127. That's 877-270-3127, or go online at iwantmyltc.net, iwantmyltc.net.
Good morning, everybody, and welcome to Radio Wall Street. The Money Man Report is on the air. We're broadcasting to the world on iHeartRadio and in South Florida on 880 AM The Biz. We're going right to New York? New York, for my friend John Nigerian of Option Monster and CNBC. Good morning, John.
Great to be with you, Dan. Thank you.
Thank you very much. And I have Elliott Gu, the energy strategist, on with me as well as my co-host today. This is basically capitalist times today. And, John, one of the most popular features we've had in a long time has been that I featured your favorite stock coming out of that correction a few weeks ago. Hundreds of people were interested in that, and we ended up having many, many inquiries. So now what I want is your favorite Republican Senate stock. What is your favorite stock coming out of this new election?
Well, one of them would certainly be CNQ, Daniel. CNQ's Canadian National Resources, and that's a stock that is involved with the, or that will be deeply involved with the XL pipeline, and I believe that that legislation will be going to the president's desk early in 2015. The stock's near the 52-week lows. If you wanted to be, if you wanted to wait a little bit, it doesn't have to make that huge move now. But it's a $33 stock. It was $46. I think if they approve the legislation and it goes to the president, then, of course, he does have the opportunity to veto it. But I don't know what he's going to point to when he attempts to veto it at that point, because I believe they've addressed most of the issues, if not all of the issues, regarding the aquifers and so forth in the area. And there are certainly less safer ways to transport crude oil across the country. We've seen a number of spills coming from the trains and so forth. And right now, that's the only way that they're moving that oil is by a train. So I think this is a much better solution to get it down to where we actually use it, rather than just having the pipeline end there. So extending the pipeline, CNQ is my play.
This seems like one of the things where they might be able to get together two-thirds of the Congress, two-thirds of the Senate in order to override, does it not?
It does. And it, like I say, I don't know that I don't know that many Democrats really opposed it, but I think
that's what I'm saying. We got 53 Republicans that will probably all vote for it, and it looks like they might be able to get 20 Democrats for that one.
Exactly. And so I think it's a good idea from a job standpoint, Dan. I think it's a good idea, even though presently crude oil prices are depressed in our country, and your guest would be far more expert at that than me. But I would say that with Saudi cutting prices here, basically, robbing Peter to pay Paul, they're increasing prices over in Asia so that they can cut price here and basically try to crush some of the frackers and so forth. Ultimately, that won't play out long term in my mind, and instead they'll be in trouble with that strategy. Saudi will.
One of the features people like the most when you come on is the heat seeking, because you've got that very fast pipe and you see the trades being done by the big hit traders. As a matter of fact, one of my top tier people asked me about that this week. And I was saying, well, everybody can't really do that, because you have a big database and you kind of know who gets them right and who doesn't. So what I want to know is, if they're not yet speculating on the Keystone Pipeline, what are the big hitters who get it right buying options on this morning?
Today they're buying options on Morgan Stanley, and they were also getting into Coors yesterday. They're into Coors more today, and that's not Molson Coors. That's Michael Kors, the fashion icon. And I think that one, Daniel, honestly, I do believe that's a steal, KORS. I bought it. We put our customers' money in it yesterday. Knock on wood, the stock's up today. But a strong dollar is great for retailers, and it is because of all the reasons you already know. I'll just make it very, very quick. It is because everything we sell in these stores in the United States, virtually everything's made overseas, whether it's Pakistan, Vietnam, China, wherever. And the fact that the dollar is strong means the dollar buys more for less. And that's, I think, a big positive for Coors and all the retailers, but this one in particular because it's down $30 from the 52-week high.
That's right, it is. You know what? I just noticed that. And, of course, the people who are the buyers of the stuff at Coors are getting a big raise right now as their price of gasoline declines, and it goes right into their pocket.
Exactly. So, I mean, I don't want to overstate, how the average American buys 500 gallons of gasoline a year. So, in other words, a dollar drop in the price is $500 extra dollars in their pocket. However, I don't want to, if we use it as a two-edged sword, when it goes up, we all say that, well, that's hurting, in particular, the middle and lower class. I think, obviously, when it drops, it's a benefit to that same class.
Oh, you want me to? Okay. Well, John Nigerian, thank you very much for being with us. I appreciate it. People love this, and I always get requests for your stock picks, and so congratulations on being so popular. And, of course, you can find John's work at optionmonster.com, and everybody, all of our students, always sign up for trademonster.com, where they get to practice all the things they learn. And thank you very much, John. And, of course, I want to remind you to go to Capitalist Times, where Elliott Gu's work is, and also Roger Conrad contributes there. And you'll be hearing a lot about that. This is Capitalist Times Radio, and we are the official radio show of capitalism. Elliott, thank you very much for being with us. And we'll see you all tomorrow, folks.